Hi everyone, welcome to another episode of Wednesday on Wealth. I'm Priyanka Charwat, a qualified chartered accountant. Today's topic of discussion will be communications and various notices that we receive from the income tax department. Most of us feel that once we file our income tax return, then we have complied with all the provisions of the Income Tax Act. But we get surprised once we received an additional notice or communication from the Income Tax Department. So today we'll try to understand what additional aspects we need to take care of so as to ensure that we are in compliance with all the provisions of the income tax. First thing what we need to understand is what are the different types of communication which we receive from the department. Secondly, what could be the reasons for it and how we are supposed to respond to the notices. Let's understand what is an e-campaign. So there can be two situations under this. The first one is that our income exceeds the basic exemption limit. So in case our income exceeds the basic exemption limit and we receive such communication, then it will be difficult for us as there will be additional tax liability. And the second thing is that our income is below the basic exemption limit. There won't be any additional tax liability. In case such notice is received, then we can respond to such notice by logging into our income tax portal profile, and after that we need to under the pending actions tab we will have to visit the compliance portal link. After clicking the compliance portal link, we will be redirected to the compliance portal and under e-campaign we need to submit our response. The second one is an intimation under section 143(1). So we receive an intimation under section 143(1), which means that the return which we have filed has been processed by the department, and there could be three situations. The first one is that the assessing officer has determined an additional tax liability. In this case, we will have to pay off that additional tax liability within 30 days. The second is that there could be an additional refund. And the third could be that the return of income filed by us has been processed by the assessing officer and there is no additional tax liability or no additional tax refund. So the points which we need to keep in mind to avoid any additional tax liability after we receive an intimation is that first one, there should not be any arithmetical error. The second, we should not claim for any expenses or losses which is incorrect. Third, we should include details of all the income which we have earned during this financial year in the return of income, and we can expect that within a period of 1 year from the end of the financial year we will be receiving an intimation from the department. Then the third one is a defective return under section 139(9). So after we file our return of income, there is a chance that the assessing officer will intimate us in case there is some defect in the return of income filed by us. The reasons could be that we have selected incorrect ITR form, or we have not filled up all the mandatory fields which is required to be declared in the return form. After receiving this notice, we are required to submit a response within 15 days, and in case we have not submitted the response, then it will be considered as invalid and it will be deemed like we have not filed a return of income for that particular year. Then the fourth one is inquiry before assessment under section 142(1). There can be two situations. First one, that we have filed our return of income but the assessing officer needs some additional information from us. Then the second, we have not filed a return of income and the assessing officer wants us to file the return of income. So basically what the assessing officer does over here is he tries to collect additional information from us on the basis of which he can complete the assessment. So it is mandatory for us to give response to this notice after providing all the documentary evidences. If the assessing officer is satisfied that there is no additional tax liability, he won't proceed further for assessment. So the consequences for non-compliance to this notice could be, first one, the assessing officer will complete the assessment on best judgment basis under section 144, wherein with the data which is already available with the assessing officer, he will try to calculate a tax liability and complete the assessment and issue a demand. The second one is that we will be liable for a penalty of rupees 10,000. Third one, we will be liable for a prosecution which will extend up to 1 year along with fine. So the fifth notice is a scrutiny notice under section 143(2), which is in continuance with our previous notice, that is inquiry before assessment. So in case we have not satisfied the assessing officer with all the documentary evidence which he was expecting, then he will proceed with this notice, wherein he will issue a detailed questionnaire of requirements and explanations which is required to be submitted to him. After we respond to this notice, there is a chance that there could be an additional liability, or he will accept the return which was already filed by us, which means that there won't be any additional liability or refund. So the next notice is about income escaping assessment under section 148. So this can be issued when the assessing officer believes that there is additional tax liability, we have not disclosed formations correctly, or in case we have not filed a return of income. But what the plus point is that before issuing this notice, a notice under section 148A is issued, wherein we are given an opportunity to explain the source or provide other documentary evidence to the assessing officer. So in this case, if we are able to satisfy the assessing officer and justify with all the explanations and documentary evidence, then he will not proceed with issuing notice under section 148. So the time limit for this notice depends upon the detail of the information which is available with the assessing officer, on the basis of which he has issued this notice. So the first one is the income which is deemed to be escaped. If it is below 1 lakh, then the time limit is 4 years, and in the second case, if the income exceeds 1 lakh, then the time limit is 4 to 6 years. And in case the details which is available with the assessing officer, if it is related to an income or some asset which is situated outside India, then the time limit is 4 to 16 years. Now the next notice is a notice of demand under section 156. So in case there is any additional tax liability on account of interest, tax or penalty, the assessing officer will issue a notice of demand which is required to be paid by us within 30 days. And there is no time limit for issuance of this notice. And in case there is a default and interest at the rate of 1%, a simple interest basis is payable. So the final section for today's discussion is section 245, which is for setting off of refund against any tax liability due. So what the assessing officer does is, in case we are having any refund due in the current assessment years, then what he does is he tries to adjust it against any outstanding demand which is due in the previous years. So for example, in the current assessment year, I am having an income tax refund of 10,000, and there is a demand due in the previous assessment year, say for example assessment year 14-15 of rupees 5,000. So by issuing this notice, the assessing officer adjusts 5,000 against the outstanding demand, and the remaining 5,000 rupees will be paid off to me. And there is no time limit for issuing this notice. For more queries, you can get in touch with our tax and finance experts. For more such videos, please subscribe to our channel.